Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to give you an update on the portfolio. But what we're going to talk about is how to analyze your own budget, how to analyze your life expenses, the cost of living, inflation, all these things that are playing a factor and making it a bit more difficult to continue to invest if you're struggling to do that, or if you want to start but not sure if you have the extra cash sitting around to even start. And it's going to be a good thing, I think, almost for everyone, even the ones that are still investing, are still invested, and continue to do so, even with the cost of everything going up. It really comes down to analyzing and looking at your finances and looking at where we can trim a little bit so that we have a little bit more extra room at the end of the month. Because I'm sure everyone is finding that there's a little bit less in our bank accounts at the end of the month or whatever. And how we can change that a little bit, because it might require a little bit of lifestyle change. And of course, that doesn't include housing or anything or food of that sort, but there are some places that we can mitigate the burn rate. And we'll talk about what burn rate means. But if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. If you're not new, welcome back. So we will go through the portfolio here at the start of the week here. And today we're closing out at $13,219.86. We're down $70.85 on the day, down 0.53%. For the 1 week, we are down $16.71, down 0.13%. So pretty flat week that way. For the 1 month, we're up $320.77, up 2.49%. For the past 3 months, we're down $38.26, down 0.29%. For the 1 year, we're up $39.03, up 0.3%. And for the all time since starting this portfolio, we're up $1,213.82, up 10.11%. And this is all in a tax-free savings account. Now, I know one of the comments down below asked me to show a transaction here for VFV, and I'll go ahead and show that. Here's the transaction that happened and the amount of shares that we got for fractional buy. We will go into the actual position itself, though, here as we scroll down. Going to VFV, that's the total amount of shares that we have. It holds about 5.87% of the portfolio. Average price is about $95.31. And our total return is down about $8.34, down 1.08%. So someone asked to go through that again. So there it is. So if you want to pause it, it is there. So yeah, we obviously have some cash going in there. We have $59.90 in there currently with $100 that took place today. It will be available later this week to make the trades on Friday, as we always do. So yeah, let's talk about what's going on in the world. So I'm sure a lot of people, including myself, are finding, and of course I just came back from vacation, so I might not be a good example of this, but we are finding we have less in our bank account than we typically did that we're used to. And there's a lot of factors that play into that. And that's probably gas is a big one. Maybe the cost of food is going up. Of course, that is in the grocery side of things. And maybe rents are going up. I'm not sure because I don't rent. But from what I'm hearing, it is a thing. But let's talk about why that may be and what's actually going on. So with inflation happening, it's costing us, everyone, a bit more to just do the bare necessities. And the job market doesn't do a really good job of presenting an attractive hourly rate for a lot of people, or a salary for people where if they're not making that much, they're just not going to work at all, which is an interesting thing to think about it. And this is a conversation I had with a colleague of mine, and we're just finding the job market is competitive. 100% it is. But we are also finding that with the cost of everything going up, you have people looking for a higher wage than normal, than what the average is. And they're not taking that job, even though they might need the capital. They might need that in the meantime while searching maybe for a better hourly rate or a better salary. And so they're just choosing not to go back to work. And that's a concern. That is a very big concern. In the business world, they have something called a burn rate. And a burn rate is the amount of capital you have and how much it is burning continuously, because it's not growing, because maybe you're building your asset or your business at the time, and how fast is that burn rate. And that should be used in our life as well. How fast is our burn rate? Is every time we are working, everything is going to expenses like rent, food, mortgage payments, insurance payments, and so on and so forth, just to live, or even the cost of just going to work, gas, and so on and so forth. We have to figure out what our burn rate is, and if we're above that line. Because if we're above that line, which is a positive cash flow, you can look at allocating dollars to investing, even if it's not much, because you should continue to invest, even if the market is not doing what you're used to seeing or used to what it's been doing in the past couple of years previously. And so figure that out. Go through your budget, figure out what needs a little bit of trimming. Now, I'm not saying give up your total life for this. Housing, of course, you need housing. You have to have a roof over your head. Groceries. One way to maybe look at cutting groceries is maybe just eat the food that you bought instead of throwing it out because it just sat there for the longest time, forgetting that it was there. And it happens, but really pay attention to that. I know some people have actually gone through their freezer and found that they have a month's worth of food in there that they can make meals out of. And that'll save a month's worth of groceries till you figure out what needs to be done. Cutting out eating out is the next one, is a big one. Now, I'm not saying it cut out completely. You probably want to enjoy at least some McDonald's, so on and so forth. In fact, I just bought McDonald's today, which is right here after my massage. And guess what? I didn't pay full price. I used the coupon. It was like $1 plus tax, and I did that. And the reason I did that is because I'm not going to pay full price for it, because I know there's another way to get it for cheaper. So finding these ways is not being frugal and not being cheap. It's just being smart. Every business does that. They look at areas that they can cut costs because they have investors to pay back. And the thing is, you're the investor for your life. If you are not looking at ways to cut costs, would I want to invest in you? Probably not. So if you treat yourself like a business and present yourself where people would look at you and be like, this guy produces a positive cash flow, just like a business. I want part of that share. So I'm going to invest in him. Think about it like that. Treat yourself like a business. Where can you cut costs, but not cut operating expense? So let's say you have Netflix subscription and you enjoy Netflix. I'm not saying give that up. Absolutely not. I'm not saying that. I'm saying maybe go down a notch in the levels that they have, the tiers that they have. And that goes for every other thing, right? Can you cut down the tiers to save you a few dollars? And this is not penny pinching. This is just taking a serious look at what you need to do. If you're now I'm talking from a perspective of a person that doesn't have kids or anything of the sort, but there are things that you can do, and it's not looking at cheaper things, that a cheaper brand. It's a less expensive brand, but it still does what it needs to do when it comes to food. So that's something to look at. The other thing is, I know gas played a big factor, but here where I'm at, the gas has gone down quite a bit. After I came back from my trip, gas was way less than what I left it at. It was like $1.99 when I left, and now it's like $1.49. Gives you an idea of what area I'm in Canada and which province I'm in. And so that's another option. Another option is to pay down debts as quickly as possibly you can. Maybe putting a little bit extra there so that it frees up a little bit of cash flow if you're at that time. But really analyzing the budget, figuring out what you need to do in order to not get ahead, but produce a positive cash flow in your budget. And if you haven't done a budget, I suggest that you do. I suggest going through line for line what you did last month, and categorizing it and figuring out, can you beat that by, let's say, $50? Can you use $25 less this month than the previous month to free up that cash flow? Because this will create a financial literacy for you. This will create a balance sheet for you. This will create an expense sheet for you. This will teach you how to operate yourself like a business. Because when we do our due diligence and look into companies and their earnings. That's what we're looking at. We're looking at their top line, their bottom line. We're looking at the expenses, cap expenses. We're looking at what stays and what goes and what profits are being created. Now, when I'm talking profits, I'm talking about how can you increase your income, whether that means taking, if you're working full time, taking up a part-time job just for the time being, just till we can get through this period that we're in here in Canada. Because we're heading for a recessionary period. I mean, what was the CPI last month? Like 7.7% or something like that. And so, yes, the cost of goods is going up. You can see interest rates are going up. You see the rates for homes. Now, housing affordability is another thing, but yeah, we have to set ourselves up so that we can continue to live the life that we lived. Just, we gave up a little bit of creature comforts, as I like to call them, which gave me the ability to do what I did. And I know I planned this trip like a year ago in advance, just because of what was going on and travel restrictions like that. But once they opened up, I was ready to go. Now my ticket was a bit more than what it is now, probably double the price. I paid double the price of what it is now, but I was okay with that. And that's what's helped me, because I consistently analyze my budget. I consistently look at where I'm at for the day. And it helps me move forward and plan for things in the near future. For example, I've cut eating out quite a bit, actually, where it's freed up probably a couple $100 a month. As a person that doesn't cook for himself, I reverted to cups of ramen for some of my meals. And as you've noticed, I've bought a $1 Big Mac, a treat here and there. And the thing is, it means something different. I enjoy a Big Mac more when it's $1 instead of when it's $5. And so that's all I'm saying is really look at your budget, figure out what you need to do, and start creating funds, different accounts where you can put money and save it for, like, let's say a date night, let's say a trip. That's how I've been able to continue to put $100 every single week into this tax-free savings account, and the extra 25 that we are doing this year for the index fund. And so looking at your expenses, looking at where you can reduce expenses and maybe increase income at the same time, because reality is, a lot of people, it's difficult to increase income, but it's very manageable to decrease your expenses. So it's something to consider, something to look at, something that will help you stay invested instead of selling your investment because you need the cash just to make ends meet. But it's also a way to continue to invest over, I'm going to go ahead and call it a recessionary period here in Canada, because let's just not be around the bush. Okay. We've seen it. We're experiencing it. We're seeing less money in our accounts, and we're seeing less money being allocated to our investment, which is our future. For a lot of people, it's their retirement. And so take serious time to think about what you need to change. And it doesn't have to be drastic. If you like your $5 coffee, go for it. I'm not judging. Really, I'm not. And if you're a couple, have that conversation. I know I had that conversation with my spouse, and which is the reason why I went to Korea. We had that conversation, and it's very, very important. It gives you a different mindset, and talk it over with your spouse. Figure out what you need to do, and honestly, there's a plus side to it. It makes your relationship stronger, to be honest. So take a serious thought into that, and figure out what you need to do. I know I've talked a long time, but I'm sure everyone knows this. But let's make this a call to arms to analyze your finances, review your budget, make some tweaks that you gotta. But one thing my girlfriend said to me was, don't give up eating out just to save a few dollars, right? If you enjoy eating out, go ahead. But just find other ways to cut expenses, right? Because you don't want to suck the enjoyment out of your life. And so other than that, guys, I hope you did enjoy the video. Don't forget to leave a like and subscribe. Don't forget to use the code down below for, some free value referral codes and some money. I don't know if you use it. Free stock. I think they used to be free stock. It's not anymore, but for Wealthsimple Trade, of course. So on that, guys, have a great week. We'll see you in the next one. And again, thanks for watching. Bye.